Hi there, I'm Darren McDermott and you're watching Dúchascápaí TV. The US economy suffered its worst performance in 5 years in the first quarter as GDP fell by 2.9%. I'm joined by Bernard Baumohl at the Economic Outlook Group. Now Bernard, the terrible weather has been blamed for the fall, but how much of a role did trade play in the figures and what were the other contributing factors?
Well, there were probably three factors that contributed to this rather sharp contraction in the first quarter. One was the severe inclement weather, which prevented consumers from going to stores. It made very difficult for people to go to work, and certainly truckers couldn't deliver their goods to stores and to factories because of the snow on major highways. So weather was a major factor. Another reason for the sharp decline was that the government overestimated how much Americans would be spending on health care with the introduction of the Affordable Care Act. It turned out that spending was a bit less than was originally estimated, so that had to be revised down as well. And certainly exports, too, fell in the first quarter, and that may very well have been linked in large part to the bad weather. If truckers cannot deliver their goods to U.S. ports, obviously, the U.S. is not going to be able to ship as much out of the country. Nevertheless, we did see some increase in imports, but the result was a net decline in our, a further decline in our trade deficit, and that too contributed to the rather dramatic drop in GDP in the first quarter.
Bernard, US bond prices jumped as a result of the data. Now, what are your views on the market's reaction?
Well, certainly it's understandable that the bond market did increase, that is, yields have come down significantly as a result of this, because it seems to reinforce the notion that the Federal Reserve will continue to be very accommodative and allow interest rates to remain low for a longer period of time. This was an exceptionally weak GDP report, but I think it's very important to note that what occurred in the first quarter was not a reflection of any weakness in economic fundamentals in the United States. It was purely, the result of some very transitory events. And that the economy is expected, to pick up this quarter by about 3% to 3.5%. So the bottom line is that when you take into account the first and second quarter in the United States, it's going to be a wash for the first half, meaning essentially zero growth in the first half of this year.
Bernard, despite the poor data, we are seeing a significant improvement in unemployment and other data. But what are your concerns? Now, are you feeling bullish or more bearish about future data?
We're growing increasingly concerned that companies may begin to slow down the pace of hiring in the coming months because of some fresh uncertainties about the economic outlook. And the reasons for this are, we're seeing some rise in energy prices, and that's affecting business costs. There is great concern that the rise in inflation makes it more difficult for consumers to spend because companies have so far not shown much willingness to increase wages to offset the increase in the cost of living. And that means that more Americans are going to be experiencing an erosion in purchasing power. They won't be able to spend as much. Certainly the rise in energy prices globally will affect economies around the world. We've seen that here with the higher prices in Brent oil and in West Texas Intermediate. And then there's just this general sense of unease that conditions in the Middle East could get a lot worse before it gets better. And this lack of any sense of resolution could lead oil prices to go even higher. And I think that's creating a new uncertainty in the business community, and they may slow the pace of business investments and hiring in the coming months.
Bernard, thank you very much. Well, viewers, do stay tuned as we have plenty more just like this heading your way. See you very soon.